You are about to listen to Getting Home Sourced with Gianno Buonaguro. This is episode 104, titled 2 Years Around the World, which was released on August 7th, 2026. Now enjoy the show.
Welcome to Getting Home Sourced with G, your one-stop shop for all things real estate. Gianno is your go-to guy with over 25 years of experience in the game, serving up the insider scoop on buying, selling, and investing in two of the hottest markets, Las Vegas, Nevada, and Cabo, Mexico. Whether you're looking to score the perfect home, seal the deal on a sale, or dive into the world of international investments, G's got the tips, tricks, and swagger to make it happen. Remember, in Nevada, the smart choice is the right choice. And when it comes to Cabo, you better go oceanside with Cabo G. If you were looking for a quiet, tranquil show about real estate, this ain't it. Gianno has this thing called passion. Let's unleash the beast. This is Welcome to Getting Home Sourced. And now your host, Gianno.
Hey, what do you say? What do you say, folks? I have to say it out loud. I never thought we would get to this point in our show. This is episode 104, equating to what? 2-year anniversary. Folks, congratulations to not only me and my crack staff and everybody that puts this show together, but it's to all of you, and this show goes out to all of you. So I just want to raise my champagne glass that's right in my hand and saying cheers to everybody. We did it. We are here. It is number 2. Now, of course, with most kids, they always say terrible 2. Not with this show. By any means, we're not terrible. We are terrific. This is the terrific 2 that we're going into. And I just want to say to everybody, thank you so much. To wherever you're listening around the world, folks, this is a big occasion for us. And I'll tell you why here in a little bit. But of course, I got to start off by saying good morning, good afternoon, and good evening to wherever you're listening around the world. Thank you so much. And of course, I'm going to start out this time by saying, who are you folks? The Ferrari that drives the engine. This is all of you out there. You are the engine. You make the car go. This is the show. This is the Ferrari. This is the Rolls Royce. It's whatever luxury car you want it to be. We're in it. We're driving. We're going all over around the world, folks. And of course, for my first timer, my newbies, thank you so much for listening. Wherever you found out about us, thank you so much. Please, everybody, like, subscribe, share the show, get on Vegas Home Source, subscribe to the newsletter. It's free. Check it out. We got a lot of great things on there. But of course, I do want to mention one thing, which is very important to me. We have cracked over, folks, 900,000 listeners around the world. So I want to thank you all so much. And because of that, all of you have put this show in the top 20. We are ranked right now 18th in the world. My goal is to obviously exceed 1 million listeners. We're going to get there, folks, because when we first started this show 2 years ago today, I think I was lucky if I had 1,000 people listening on the first show 2 years ago. And now we've come so far in such a short period of time. And just to get the word out there, to get the message out there, we are the little engine that did, not could, but did, And here we are, folks. We're on the precipice of 1 million listeners around the world, and we are climbing up the rankings. Of course, my goal, of course, we all want to be number one, right? But I think we're number one in content. I think we're going to get to number one. I think the number one show in real estate and podcasting around the world, last I checked, was just over 3 million listeners. So, yeah, we got a long way to go. But you know what, folks? To really be like, I think, below 100 and to climb all the way up in, I would say, in a year and a half, now we're at 18. I mean, folks, this is all because of you. It's not because of me. It's all because of you. You guys out there, I love you all for making the show happen, because if it's not for you and you're not listening, participating, and getting engaged, this show doesn't really exist. We're just another blip on the radar and we're long gone. But you know what? I just want to say we're family. This is what family does. We all support each other. We all thank each other. We all rally around each other. And Getting Home Source is really about all of you. It has nothing to do with me. It's all about you. And because of that, you've shown the love, you've shown the support. And I just want to show you where we all are on our 2-year anniversary. Folks, I don't know what to say. I mean, it's really an emotional situation. And I just want to say thank you from the bottom of my heart to make it happen, because you all make it happen for not only me, but for the show. And we just love what we do. We enjoy what we do. This is why we do it all the time. And we're going to get better, folks, because we don't stay stagnant per se. I mean, we just get better and better. And it's like fine wine. The older it gets, the better we get. And now here we are turning 2 years old. So again, thank you so much for that. And for my reveal, I just want to let you know that coming back from Cabo, I put together now, that is on my website, brand new, folks. When you go on there and you look at the tab, I have the 2026 market report and also buyer's guide for Los Cabos, Mexico. Please check it out. It's there for you. It's free. I want you to take a look at it. You have any questions, let me know. Of course, we'll talk about it on the side via email with Miss G, or you can just basically email me, however you want to do it, text me, whatever. But it's there for you live, fresh off the presses. 2026 market guide, as well as a 2026 buyer guide for everybody around the world that's interested in Los Cabos. It's there for you. It's fresh. And we took us a little bit to put together, but I think you're going to love it. It's fantastic. I love it. So if I love it, I know you guys are going to love it. So that's that. Now, of course, for everybody that wants to get in touch with me, toll-free G, 888-528-2810. For my international friends, for my domestic friends, just swap out the 888, put in the 702, same number, we're ready to go. And of course, we have our partnership program. Who else? We got Las Vegas, Cabo, and our tax benefits. Las Vegas, again, it's all about you here locally. We get the home builders, we get the buyers, we get the sellers, and more importantly, we get the other realtors that need help to push properties along. We promote everybody on social media. It's on all the platforms, LinkedIn, Facebook, Instagram, Reddit, wherever we are. I mean, that's what's going to happen. We want to help everybody in getting transactions handled, but more importantly, taking care of the consumer, because that's the most important thing. And then everybody else falls into place, right? So, and then for Cabo, hey, I was just down there, Mendano Massage. It is the best. You got to get a hold of me, folks, because let me tell you something. With all the walking that I did and all the hiking around that I did, definitely needed them. So thank you so much for getting my back straight, because it was a little banged up there. And of course, we have Cadoon Hotel. I had a few people already stay over there. They love it. They have the 360-degree view that overlooks the whole city. And it's just 5 minutes up the street. Boom, you're right on the ocean right there, folks. And lastly, tax benefits program. We're going to be talking a lot about this going into the end of 2026 and turning the page into 2027. Why? Because a lot of people are not asset protecting themselves. And you're going to hear about this on the back half of the show when I cover what I cover. Can't give the secrets away too fast. But I will tell you, really super important. Please, wherever you are around the world, you have to get yourself asset protected. And if anybody tells you, well, I have a mortgage and I can't put it into a trust, or I can't put my property into some type of corporate entity to protect yourself, wrong answer. You can. You get a hold of me and I'll tell you how to make that happen, because yes, you can do that regardless of what people are telling you. Trust me when I tell you, I don't steer anybody wrong. It's an actual, factual, practical show. And the reason why I tell you that is because with Vegas, I work with my tax benefit people over here live the corporate life. This is what they do for international people around the world, especially domestic, for also purchasing property for my Canadian friends, also for my Mexican friends, for my South American friends. Folks, please, you have to write into me about that. I really want to make sure you're protected with your house so you can prevent the sadness that's taking place, not only here in the United States, but elsewhere. Again, I'll get into that. But with that being the case, we're naming this show 2 years around the world because the topic of the show today is that I want to do a retrospect. I want to just kind of bring it back and just put everything into perspective. Where we were on August 7th, 2024. Here we are now, August 7th, 2026. What has happened in the last 2 years? Well, obviously a lot, but we're going to cover on this show specifically the key major market points around the world. Okay, so I'm going to start with Europe and then swing it back here at the end and come back to the United States. But I also want to show you all where were we back in 2024, what has happened in the last 2 years, where we are now, where we're going. This is very important to kind of see because we get so caught up in all the blah, 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 the drama. Everything gets drowned out. All this diversion, as we talked about, pivoting, misdirecting, misguiding, and we kind of lose track of everything. And again, I'm going to give you the cold hard facts. I did a lot of studying on this up until the show right now that we're going live with. There's a lot of data here I want to cover. The show's probably going to be a little bit longer than normal, folks, but you know what? That's okay because I want to make sure I touch all the people that have touched me. I want to give you back the information. And for those that are interested in other parts of the world, hey, this is your show, so we're going to cover it and jump right into it. But this is what I think is the most important about it because I really want people to put on their thinking caps and realize, hey, did I miss the boat 2 years ago? Did I miss the boat last year? Am I missing a boat this year? Or did I already jump in and was I successful and what have you? And I think that's really kind of where you have to look at it. We talked about this really from day one, all the way from the very first show when I talked about buyer contracts and seller contracts and how contracts are written here in the U.S. and now growing to where we're really getting information from all over the world to bring to you. So wherever you are in the world listening, you have to be prepared to see what that economic climate is going to be for you and how that's going to move towards the end of 2026, more importantly, into 2027. So without further ado, we are going to start off with Europe for our 2-year anniversary tour around the world. So with Europe has shifted from post-inflation stagnation to rebounding, driven by interest rates stabilizing, where undersupply of housing along with investor confidence is a key, right? The key trends now for the last 2 years going into residential was price increases, constrained construction pipelines, and commercial sector recovery, which is selective depending upon what country and city that you're in. That determines how the market's going for commercial, right? So with the construction slowdown due to high building costs and stricter planning rules and expensive new home build completion, this dropped roughly 12%. So in 2024, with further decline going into the latter half of 2026. So, 12% over 2 years. Yeah, I don't know. Some people might think that that's okay and that's par for the course. Others are like, well, that's a significant drop. Again, depending upon where you are in Europe and how that affects you accordingly, this is the data that's coming out, right? So the affordability concerns, lack of supply keeps upward pressure on both sales prices and rentals across the major EU urban centers, right? So since 2024, central banks have stabilized interest rates and have lowered the debt pressures that brought buyers back into the market, which I guess is good in that component. However, it's the same suspects. What are the top 10 EU investor market cities over the last 2 years? It's our same old friends in this order: London, Paris, Berlin, Madrid, Amsterdam, Munich, Milan, Barcelona, Frankfurt, and Hamburg, right? So let's hope that in 2027, we get a turnaround over here that's going to help everybody out and get Europe back on track. I know there's a lot of geopolitical stuff happening there as well, of course. But again, we all hope for the best, and that's what our goal is here for. But also to make people aware about your real estate market and where you're in. Now, let's turn the page and we're going to fly over to the Middle East. And here in the Middle East, over the last 2 years, the overall market value had a steady growth of 8% annually. So it went from record-breaking foreign investment to a resilient adjustment and cautious recovery in 2026, right? So amid regional geopolitical shifts, the UAE reached in US dollars 250 billion in transactions led by international buyers from primarily India and Europe in 2025. But in 2026, because of the regional conflicts that are going on, we had a volume dip, we had pauses in transactions. However, pricing remained stable due to the fact that they have strong bounce backs in viewing activity and off-plan sales, right? Following a spring ceasefire per se for developments for now, right? So we'll have to see how that turns out. But as we turn to Saudi Arabia, where in 2024, they hit unprecedented transaction volume fueled by what they call their Vision 2030 giga project and major global events, right? So they had steady growth in 2025 and 2026 in residential and in holy cities like Medina, though affordability gaps for domestic buyers still remains a concern for them. But Sharjah and Northern Emirates sustained a growth phase with rising mortgage restrictions and balanced demands for waterfront apartments and mixed-use spaces. Now, off-plan properties consistently made up of 65 to 77% of all development. So high net worth foreign buyers continue to drive demand for hyper-luxury branded spaces and integrated destination living, which includes wellness, waterfronts, and walkability, which are the three keys to the growth for that region. So that's actually great news over there. So that's doing well. Now, we're going to fly over to Asia Pacific. So the Asia Pacific market is marked by an uneven recovery, as they stated, characterized by surging commercial investments, and also they have core markets like Tokyo and Singapore that's driving the traffic and driving the economic flow, right? So contrasted with a prolonged deep property slump in China, and we talked about this before, folks, I feel bad. I mean, I know China's getting roughed up and getting beat up in the woodshed out there when it comes to real estate property and values. And unfortunately, because of their slump as a regional activity, they only projected 5 to 10% growth into late 2026. However, commercial real estate transaction volumes climbed back from cautious price discovery phase in 2024 and in early 2025, backed by stabilizing interest rate and strong cash flows. Top hubs such as Tokyo, for instance, has cross-border capital in the region alongside strong activity in Sydney, Australia, Singapore, and Seoul, as well as Hong Kong. But office space, or office sector as they say, reemerged as a top investor preference due to constrained core supply and returning physical leasing demand, while of course our favorite friends now, data centers and logistics, paved the way for rapid expansion, right? However, China's residential and developer crisis extended into 2026 with falling home prices, weak buyer confidence, and downscaled new construction. Decouple that, it's a trajectory in the region that's just, I hope that they figure it out over there. I mean, I don't know. It's been struggling there for quite a while, right? But Southeast Asia and India markets, using specifically in Singapore, Indonesia, and India markets, showed strong institutional activity, keeping the regional economic expansion stable. And they're saying it's roughly like around 5%. So we'll just round it up and say 5%. So with that being said, I know we covered a lot of stuff over there. So again, I want to take a quick commercial break. We're already halfway around the world for our 2-year around the world anniversary tour. And then when we come back, we're going to cover the rest of the world in the next 2 years to celebrate us, our show, like I said before, where we were, where we are, and where we're going. Stay tuned. We'll be right back.
Are you seeking a virtual real estate experience? Are you ready for a personalized concierge white glove treatment service? Vegas Home Source in Cabo G, we provide the shining star this year. Why? Because every star shines bright and you are that star. Contact Gianno, your real estate experience expert, and your journey to your castle is complete. Call him toll-free at 888-528-2810. That's the number that treats you like the star you are.
Hey, what do you say? Hey, folks, I want to say thank you so much for sticking around for the back half of Getting Home Sources. I'm your host, Gianno. And again, folks, I can't do this show without you guys. I have to give everybody flowers. You deserve it. You're the ones that make it happen, because if it's not for me, it's not for you, it's not for anybody, right? So I'll just like to say again from the bottom of my heart, thank you so much. It means the world to me that you're tuning in. It means the world to me that you're telling your friends, family, whoever your sphere. And for those that just happen to stumble upon us, please stay tuned. Please keep liking, subscribing, sharing. Let's get the word out, because at the end of the day, I'm so super excited. We are so close to hitting 1 million listeners. I want to really attain that goal. I think we're probably about 70,000 listeners away. We're going to get there. I'm pretty confident about it. I mean, we're doing leaps and bounds here, folks. But because of all of you, we're making it happen. And I want to thank you all for that very, very much. So again, it's going to be a terrific 2, not terrible 2 like as the kiddies, like we said earlier. It's a terrific 2, and I can't wait to jump in, because we got so much to cover for the rest of the year and going into 2027. But back with the show, we want to now fly down to the land down under. We're going to hit Australia. So with Australia, I mean, this market, they said, has shifted, strong post-pandemic boom from 24-25 to a broad national downturn by mid-26, right? Driven by rising interest rates, federal investor tax changes, and affordability limits. Now, the national slowdown home value index dropped 0.08% in July of 26 alone, marking the sharpest single month decline price drop since late 2022. Ouch, that hurts right there. But Sydney and Melbourne are major capitals that lead in declines, with Sydney home values down 1.5% and Melbourne 1.3%. But in July 26, this downturn has expanded past the southern capitals into resilient markets like Brisbane and Adelaide, both down 0.05%. Now, auction rates has buyer demand cooling significantly, with capital city auction rates hovering around 53.6%. The national vacancy rental rate remains critically low at roughly 1.8%, keeping upward pressure on rents. Now, rent growth nationally drew 6% over the last 12 months leading into the end of June of 2026, yet the housing shortage that they said continued with the population growth and low new dwelling completions mean underlying structural supply shortages that persist, preventing a severe market collapse. So in essence, you're going to have tight rents. Rents are going to either stabilize or go up. You're not really getting new home dwellings over there. And it's interesting, even with the population growth, you're not going to see a crash there, because why? They have it sustained enough to where you're going to start squeezing people a little bit. So again, hopefully, Australia starts to get some new construction builds going. They start loosening things up to make it easy for everybody. And then you kind of have those rental rates dropping down when they have, newer construction and more inventory online. That would be a big help. So now we fly all the way across the Pacific, and now we land in South America. Now, this market is characterized by, we're going to say steady growth, high rental yields, and rising demand driven by severe housing deficits. However, Brazil leads as the largest regional market, while I was even shocked about this, Colombia and Argentina present emerging values and opportunities. The Latin America real estate sector is valued at over 1.15 trillion US dollars in 26 and projected to hit 2.19 trillion by 2034. Brazil holds a 40% share anchored by strong domestic buyer preference and booming coastal urban areas like Florianopolis. If I said that right, hopefully I'll say it again. Florianopolis, major city. Colombia continues steady post-pandemic economic recovery at 3.5% projected GDP growth in 26. And again, GDP, growth domestic product, right? This is supported by ongoing structural housing shortage requiring 400,000 new units annually. So we'll have to see how that works itself out. Now, Argentina, which is the third one, experienced renewed foreign and domestic investor interest, which I thought was kind of shocking, in Buenos Aires due to radical economic reforms and early adoption property flipping potential. Now, the high net rental yields are ranging between 9 to 15%, are successfully attracting cross-border capital inflows. So that's pretty good. So obviously we have Argentina now. We got some great rental income for investors for cash flow. Fantastic, right? However, there's housing deficits that are exceeding 45 million units that creates continuous baseline demand for residential development. So obviously you can see the pattern here, folks. There's a shortage of housing basically across the globe. Okay, that's kind of where we're at. That's kind of like the focus right now that we're seeing. And why is that? We'll get to that in a little bit. But at the end of the day, they do have housing initiatives across key nations that come into financing because they will come in and help finance approximately 2 million units to give some alleviation. I don't think it's enough when you're comparing it to 45 million, but hey, you know what? A little bit's better than nothing. But the challenges ahead are construction costs, inflation, and supply chain volatility that continue to pressure developer margins. So obviously they're not making too much money and they're basically building everything and walking away with nickels per se. But the high interest rate environments and local currency fluctuations add elements of risk and constraints that leverage buyers, right? So got to be heads up and wary about what's going on there. That's why I always say you have to know economically what's going on in your territory. But again, folks, you can see the pattern here. Affordability issues, shortage of inventory, which creates the affordability issues, but then also it also depends upon how your rates are and how you're buying the property, when you're buying the property, and where you're buying the property, right? So now we're going to go up to Mexico. Now, this market, which I'm covering primarily mainland statistic, shows steady overall appreciation and high demand driven by nearshoring and tourism offset by rising affordability challenges, high inventory in select resort corridors, and new rental regulations, right? Now, the national home prices had an annual growth of 7% in 25 and in 2026, which is great. Affordability pressures, price appreciation has outpaced local wage growth, hence it's tightening mortgage markets where bank rates remain around that 10 to 12% interest. And that's for locals, folks. That's not just for foreigners going in there. That's for local Mexicans looking to buy a home down there. They're getting hit with a 10 to 12% interest rate. So you can kind of do the math there and see what's going on, right? But under government programs, the federal focuses under the National Housing Program that targets massive affordability housing pipelines, including state-backed social interest construction via the Infonavit and the Conavi initiatives to basically counteract the deficits in the rental regulations in Mexico City specifically and other urban centers, implementing rental reforms aiming to tie in maximum rent increases to inflation, attempting to cool down the short-term rental. So they're trying to obviously keep rental rates down, utilizing the inflation curve, and then therefore trying to put in some regulations, guidelines, and specifications on how people are going to start renting properties as landlords and what people can afford, right? Which is pretty good. But when you turn over to other tourism destinations like Quintana Roo and the Baja California Sur, which is obviously Los Cabos, we're seeing an increase there in remote workers and tourism, up 13.5% year over year for Quintana Roo and 12.5% for the Baja California Sur, basically the BCS. Mexico City and the interior areas mainland are seeing steadier, more moderate increases, around 5% as they stated. And the stronger rental income potential, they see higher demand in short-term and vacation rentals. But in places like Riviera Maya, Puerto Vallarta, and Los Cabos, this is where the areas are thriving the most, folks. And of course, I'm in Los Cabos, so you know where that's going. And we talked about that in detail. But Puerto Vallarta, hey, great area. Riviera Maya, that's kind of like the offset of Los Cabos. You know, you got the mainland up there. You buy Cancun, Playa del Carmen, Tulum corridor, and that's booming as well, right? Because you get a lot of people from America and on the eastern seaboard of America, on the eastern seaboard of Canada, and they love going down there as well for investment. But industrial and commercial sectors find nearshoring near the U.S. border, and also major manufacturing hubs like Monterrey, Saltillo, and Guadalajara keep the industrial and the logistic demands exceptionally high, because this is where everybody's trying to chase down now, folks, all over the world. It's AI. We talked about that and how AI is now tying into the logistics. They need the data centers. They need all these things to basically store. That's where water becomes an issue. Cooling becomes an issue, the whole 9 yards, right? So that's what we have there. Now we go up over U.S. and where are we landing? Oh, Canada. Oh, Canada. Folks, I feel your pain up there. I hear about it. We're going to talk about it right now. Now, the market in Canada transitioned from high interest rate stagnation to an uneven, softer recovery marked by what? Falling national benchmark pricing. So surging condo inventory in major hubs and stark regional divides have national home prices hovering below $700,000. But the average resale prices softened nationally, with the MLS Home Price Index down 3.7% year over year. Ouch. So regionally, Ontario and British Columbia faced weak price growth and high inventory, especially condos in Toronto and Vancouver, whereas Quebec, Saskatchewan, and parts of the Atlantic Canada region set local price records due to affordability. But unfortunately, hopes of a post-rate cut rebound faded away as economic uncertainty had tighter job markets that will keep the rates up for a while, which is bad news for consumers, because I know you guys wanted those rates to come down because everything adjusted and everybody hoping that they were going to adjust down and give people a breather, not adjust up. And unfortunately, that's what happened. So now what does that mean? That means now you have a condo glut in Toronto that are hitting very hard over there as pre-sales for condos drop significantly, leaving high unsold inventory in densely based urban centers. But rental prices are dropping in 2026 due to the purpose-built rental completions that increase supply, driving national vacancy rates up, slowing down aggressive asking prices. So for all those landlords that are looking to grab that rent, well, I mean, they're making affordable homes over there right now. So everything's going to kind of, I think on the rentals are going to kind of flatten out over there. You let me know for those in Canada. But in the end, they're saying that Calgary, Calgary, okay, they're heading to the end of 2026. They will continue to have one of the strongest economic markets right now, led by strong population growth as Calgary GDP growth, product over here, accelerated from 1.85 in 2025 to 2.7% in 2026 as more capital is moving out in the Western region corridor out there. Plus, folks, nonstop flights from Calgary to Cabo. I'm just saying, folks, if you're in the Calgary area or an Edmonton area, hey, Edmonton, Calgary, not that far away. Hop a flight, come on down to Cabo. I know a lot of you are. Keep up the good work. I'm just saying, nonstop out of Calgary, great hub. So we love you guys up in Calgary. Now, finally, we circle back and we come here in the USA. So what we've been talking about before over the last 2 years, we talked about what's going to happen. Everybody said, date the rate, marry the house, all this blah, blah, blah stuff. But, in all actuality, people that bought 2 years ago when the rate was actually even exceeding 8% at one time, and when they had a 10% appreciation, because now the houses from 2 years ago have appreciated 10%. And guess what, folks? Now the rate that was actually at 8% and actually at some point 8.5%, which was like, wow, okay, those people got to refinance their mortgage rates down now to 6%. And in some instances, they actually even got 5.9% recently. And now those people are in great position because now you have 10% equity in your house over the last, let's say, year and a half, 2 years. You got to refinance your mortgage, and now you're sitting pretty because you have your equity spread in there, right? So people did a lot of refinancing to get that appreciation. But again, 2026, as we talked about before, folks, nothing was going to change in the mortgage rates. Everybody thought that there was going to be the big crash or the big boom. That's not happening, okay? Right now, everything is just what they call stabilized. It's flat. It's normalized. Nobody's making the big money grab. Nobody's making the big, deficit per se. But I will say that with the multi-year lows, I mean, we're off by 4 million units that were being built in the U.S. from the last year going into this year, which is a little bit of a concern because that's how the housing market, new home builders trying to get their product, trying to get their inventory off, right? This is what's happening right now because in some sections of the U.S., especially in the western region, the southwestern region, this is where they're giving the biggest discounts. We talked about Nevada, where I'm at, folks, 25% off base pricing, a lot of incentives, great negotiated market for buyers, right? But if you go on the East Coast, Boston, New York, Philadelphia, what have you, you're looking up there, New Jersey area, you're looking up there where it's low inventory, so it's a seller's market. They're going to command their price points, and they're going to get it. I mean, not that much wiggle room up there unless it's a distressed situation. But right now, what I'm seeing is that you have buyers, or some buyers, I should say maybe mostly buyers, are in what we call an affordability freeze, but there's still deals available, okay? It's just where you find them and where you're going to go looking at it. Because again, folks, I hate to say it, I've been saying this from the beginning of the year, looming short sales, looming foreclosures. And for those that don't know short sales, that's, let's say, if I bought my house for $400,000 and now it's worth $300,000 or $350,000, I'm upside down on my value because I probably overpaid for the property a year or two ago, maybe 3 years ago, and now I'm paying for it, and now I'm stuck in a short sale situation. I don't want to pay the mortgage because I'm just throwing money away. I'm not going to get my value back. So now I don't stop paying. It goes in a short sale status. Now, if the bank doesn't do anything with me to work out the deal, now it goes into the foreclosure period where now the bank takes the property back and they either put it out for auction or they do a private sale. They want to get it off the books, and investors come in and swoop in and pick that up, right? So that's what's going on right there. Appreciation cooled a little bit again in some areas. I mean, obviously Florida, we talked about Florida before. A lot of East Coasters, Eastern Seaboard have flocked down to Florida. They're getting saturated. I know a lot of investor companies that went in there, bought a lot of bulk inventory. They had a lot of problems in Florida, and now they're stuck moving their inventory. They're taking losses just to get out of there. So, again, you're going to see a cooling off period as well in the Southeast region. But again, folks, for those that don't know that are outside the U.S., okay, now what we have is what's called midterms. So our political climate is that we already have a president in, so he's in for 4 years, so he's in until 2028. However, every 2 years in between, we have what's called the midterms. Now the midterms come up really in 90 days. I mean, we're 3 months out from our U.S. election, and the midterms will decide, again, between the political parties, between red and blue, red being the Republicans, blue being the Democrats, and now seeing how that's going to affect the economy, which in turn is a trickle-down effect that how it affects real estate pricing. So what happens now as we get closer to the elections, and I see this happening, I've been doing this almost 30 years, folks. I can tell you this in my sleep. At this time period, you have two types of buyers. You have scared buyers and you have aggressive ones. However, on the flip side, you also have scared sellers and then you have aggressive sellers. So it depends upon how they think, what side of the fence they're on, and what's their exit strategy for getting out of the property. And for the buyers, hey, it could be a great opportunity. You get that scared seller, you're going to get a great deal, right? So you have to figure that out. But that's what we're going to see on the fence now. And this is going to start ramping up here around October, mid-October. You're going to start seeing either a strong pullback or you're going to start seeing people be aggressive and say, hey, I want to get this property. I don't care about the political climate, because in any climate, again, I always say to people when they say, when's the best time to buy, is when you're ready. Don't worry about anything else. If you're ready to buy and you have the financial wherewithal, you pull the trigger and then you let the chips fall where they may. But be smart and strategic about how you're buying. That's the most important right there, right? But again, this is what's happening. I mean, I can't believe what's happened over the last course of the last 2 years. I mean, you have to see what's happening. What's the common theme, folks? Overall, you're seeing affordability issues. You're seeing interest rates fluctuate. In some countries, we went from up to down, right? Now we're stabilized out. People thought in the U.S., hey, the interest rates might go down to 5% and start triggering a lot of things. Not really. But you have to be strategic, especially in the U.S., whether you're an international buyer or domestic buyer. You're getting discounts. You're going to get negotiated prices. It's a negotiated market. You have to see where you're at and then figure it out. Again, that's why you talk to your professionals, right? You talk to your accountants. You talk to your attorneys. You talk to your financial planners. And you talk to your realtors. That's the key right there for success. Have a built-in team behind you, so this way you know what you're doing, right? And again, for foreign investments, hey, folks, like I said, I just came back from Cabo. People, it's still a cash market down there, and people are still spending money. So again, I kind of find it hard to believe where people are like, hey, I can't afford to buy a house here, but they're running down to Cabo, for instance, or Puerto Vallarta, and they're spending cash and they're spending money in a condo because obviously they're taking advantage of the high rental returns, and you're going to get good returns on your investment down there. And I keep saying that to people. It's like the amenities are expensive, but the services are cheap, and that's what makes the peninsula of the Baja California Sur so special, in Los Cabos and San Jose and even La Paz, right? But overall, folks, that's it in a 2-year period. We covered the globe. We covered the world. I hope this makes sense to a lot of people. But more importantly, again, it's about us. It's our show. It's our 2-year anniversary. And I just want to say thank you again from the bottom of my heart. Please, 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 just spread the word. We want to hit 1 million listeners. I know we're going to get there soon. I'm hoping that maybe this show we might hit it. You know, we spread the word. Let everybody know, hey, we're 70,000 plus away. Let's make it happen. Let's do it. Let's make a difference, because we are making a difference. We're climbing the charts here. We're ranked 18th in the world, folks, and this is all because of you. So we are ranked 18th. Not me. It's we. We are ranked 18th. I want to get to 15, then get to 10, then get to 5, then get to 1. We're going to make it happen because why? We have a lot of great things coming down the road. We're an actual, factual, practical show. We're telling the truth. We're telling street talk. We're telling like it is. And for those that have listened to all the content that we just went over, I know it kind of resonates with a lot of people. So you know that what I'm saying is actually making sense. It's the truth, right? So, but at the end of the day, you know, we're making a difference here. Thank you again so much. I really appreciate everybody. Please, please, please go on to VegasHomeSource.com. Again, I have free MLS for you for Las Vegas in the United States. I have Los Cabos for you. More importantly, again, for all my people that are so interested in Cabo, check out the newsletter. Go on there. We're going to have a great newsletter coming out here this week. We're going to have a lot of fun stuff to talk about there. But more importantly, on the website, the Cabo Market Report, you can see the data. You can see the numbers. It's right there. I pulled this all out from our local organizations down there to give it to you, to give you the information, to show you what's going on in black and white, but also my 2026 Cabo Buyer Guide. Get familiarized with it. You see the process. Everything that we're talking about is there in black and white as well. It's there for you to enjoy. Again, if you have any questions, please feel free. You can write me. You can talk to my virtual assistant, Ms. G. You can text me. Whatever you want to do, we're here 24/7 for you. It doesn't matter where you are. We're available for you. And again, I just want to say thank you so much for making this show what it is. It's special. And thank you so much for my crack staff for making it happen, because we're a machine here, folks. And the machine gets oiled. It gets bigger and stronger and faster. And that's why I always like to say that we're the engine that drives the Ferrari, and it's all because of you. So on that note, I want to say love you all. Thank you all. God bless you all. Be safe. Take care. We're 2 years old, folks. I can't believe it, but it's here. Take care.
And now it's all over. And that's the hardest part.
You have just listened to Getting Home Sourced with your radio host, Gianno Buonaguro. This podcast is a registered trademark and may not be reproduced without the express written consent of VegasHomeSource.com. For additional information about buying, selling, or investing in real estate, call or text Gianno toll-free at 888-528-2810 or visit his website at VegasHomeSource.com. Thank you for listening, and don't forget to like, share, and subscribe.